Welcome back to the Future Show here on the TD Ameritrade Network. I'm your host, Ben Lichtenstein. Now, we're 30 minutes into the show this morning, and so far we've been talking indices, Fed Chair Jerome Powell's comments on the Hill yesterday, and we took a look at the metals, the grains. We've got some 7:30 numbers that just got released. We're going to prepare some full screens, and we'll take a look at those numbers. But after talking about the financial markets here, or after talking about the energies and some of the commodities, I want to shift our attention here in the second half of our show to some of the financial markets. We're going to preview some of the numbers that headed our way this morning, and as always, we'll take a look at my chart of the day, so stick around to help us break down some of the recent price activity this morning. And in the dollar and in the foreign currency markets recently, we've asked the chief market strategist at Agora Financial. We've got Alan Nuckman. He's going to join us this morning. He's live from the floor of the CME Group here in Chicago. Alan, thanks for coming on. We appreciate your time. Let's get right into the dollar. Ben. Good morning. Let's get right into the dollar and how it's been coming off. It's now back below the 96 handle this week as the Fed continues to echo this more dovish, prudent, and, as they said, a more patient approach.
Yeah, I think we're both on the same page here. This dollar is critical. It may have been the last call in the dollar index with that high that we had here recently. Technically, the March contract took out its highs from December, but it wasn't sustainable. And like we've said before, how is the dollar index going to continue to strengthen if there are no rate hikes in the future? So technically, being below this 96 midpoint level of this action is very important. It's traded between 95 and 97 here now. We look at November, December, and January. Now we're breaking to the, if we can break to the downside, that would target 93 in the dollar index, the range on the breaking below that support. And the last time we were at 93, the stock market was at its highs. Wow. So there's something to pay attention to here with this dollar index.
All right, so Alan, you know as well as I do, the dollar is really a reflection of a price of a basket of other currencies. So while a more dovish Fed does impact price, so does events that are occurring across the big pond. We're talking like Brexit negotiations. Can you talk to us about how some of the unknowns and uncertainties that we're dealing with in Europe have recently impacted the U.S. dollar?
What's important to note, in my opinion, is the fact that the markets had it pretty right. The market, had kind of anticipated that the trade issues would get sorted out. You saw the stock market rally, and then this week we have the news that, things are looking good. So the markets have had it right, and they've also had it right getting to your commentary on the pound. You look at the pound, it's broken out above that 130 level. So it looks like they're going to have maybe a Brexit redo. But anyways, it's not as much of a financial calamity as it could have been. And you've got the pound significantly off of those lows. So again, the markets seem to have a pretty strong opinion that things would get sorted. We're at an interesting level right now in the pound. So far this year it's traded between 142.5 and 122.5, and right now we're at that kind of that midpoint. So let's see what the next leg is. But it is interesting that you could see that the pound is holding firm. Even though in the last couple of weeks things looked really dicey over there, and it turns out that positivity was warranted.
Yeah, let's get into some of that diciness, Alan. It's been an interesting week for Brexit negotiations. Can you speak to some of the specifics associated with we've got a parliamentary vote today. It seems as if it's kind of more a ceremonial vote. Am I wrong? I mean, I'm thinking the real objective here today is to have a look at some of the amendments to better determine the compromises necessary to get a real deal passed.
Yeah, as far as the specific go, just looking at it and from what the feeling I'm getting is they're gonna sort something out.
Yeah.
I mean, it's not that they don't really have that much of a choice. I mean, something has to be figured out, and I think the markets reflect that. And I think it's also spilling over to the euro currency. The euro currency for the longest time traded between 114 and 116, had a breakout, went down to 112.5, but now it's come back inside that 114 to 116 channel once again. So you're seeing bottoming there as well. Now, what's happened in both those currencies, we talked about this in the past, is even though they made new lows, it wasn't on a free fall. It wasn't a new push to the downside with heavy volume or heavy fear, because you saw when you look at the volatility measure, the implied volatility, it didn't make new highs even though those markets were making new lows. That's usually a sign of a bottom, and it looks like that's been the case so far.
Yeah, Alan, you touched on how you think it feels like a deal's about to get done. I'm wondering, do you feel like both sides, UK Parliament and Brussels, the EC, are becoming a bit more sympathetic to Theresa May's difficult situation. They sure seem to be willing to bend and budge a little bit more as this final date draws near.
Well, I think the reality is, a lot of it was obviously political posturing.
Yeah.
The reality, something has to be solved. I mean, how are goods going to come into the UK if they have to be, every one of them has to be checked? The amount of time that would add to the supply chain is just astronomical. It's just not feasible to continue to do business the way they've been doing business for the last 10 years. And I think realism set in. People were all, puffed up about the politics of it, but there's the reality, and the financial reality, as we always say, it always comes back to money, and I think they figured out the money aspect here is the big issue.
Yeah, as a trader, Alan, I say it always comes back to price, and price is king. I just got a chart here showing the British pound, and it has been on a move. We're talking about 600 ticks recently. If you take a look here, guys, again, this is a nice move to the upside off those mid-February levels. Alan, debt to GDP is starting to become a topic of conversation. Again, I'm curious your thoughts on this and where you kind of draw the line, when this will actually become an issue that the dollar starts to take notice. When will it become an issue for the dollar?
I don't know when, but I'll know when I see it. So being a price guy, I just got to sit back and wait for it to flow through. But a lot of things that I'm seeing are positive right now. We can talk about the macro markets, and how they've reacted, but the market's having it right. I think also this crude comeback, you did that in your last segment. We're up here at the $57 level. We talked a long time ago about 60 is the midpoint target of the drop from the top to those lows. So let's see if we can get there. That's kind of been my near-term objective. So if you look at the crude oil chart, very similar in action to the stock market. The stock market, you've got the S&P only 5% off. It's all-time forever high. So I think you're going to see, this dollar strength slowed, and that will obviously give crude another catalyst. So I think that could be a positive here in the near term. And again, we've had a lot of this discussion, and I know your chart of the day, you're going to get deep into it. But if this dollar can decline, then you can see a lot of things happen from there.
Yeah, I certainly would think it sparks some movement across the board in other major markets. Alan, last question real quick. Oftentimes, oil traders say that lower oil prices beget higher oil prices. Do lower interest rates beget higher interest rates?
Eventually.
Yeah.
And, we're in a unique environment where I've never seen the politicalization of the Fed like this. Let's remember, the Fed did an amazing job. I cannot say that enough. An amazing job from 2008 to last year. Why is their hands being forced on them now? So it's interesting to see the hypocrisy of people. They've got their political opinions, and for me, it's about price. And so, I'm not bringing politics into this, but why interfere with the Fed's action? There were a lot of people that were concerned that interest rates were too low, but now they moved it up too fast. We moved up 1%, and we're still at 2.5% or something. So it's become an issue that should not be an issue. There should be a financial consideration, and let the Fed do their job. They've done a wonderful job as far as getting the stock market to stabilize and rally, and so let's let them continue to do what they're thinking. That's my opinion for the day.
Yeah, Alan, it's very valued, and we appreciate you coming on to share it with us. Traders, that's Alan Nuckman, the Chief Market Strategist at Agora Financial. Thank you, Alan. Hey, before we get into the Treasury markets, I just real quick want to pull up a look